What's the biggest surprise, or you've been in the space over almost 15 years now?
Yeah. So, I mean, I'm trying to think about how long ago it was. I mean, generally, there was in 2007, I guess it's 13 years, everybody just assumed commodity prices were going up and they've tanked because of gas. So this probably surprised one. I mean, and two is, I don't know, it's probably still EVs, right? They're tiny, but they're growing like crazy.
He said
He
said the rate of change in technology, how rapid technology adoption has been. Do you feel that way?
No.
Right. I mean, that's the perspective though, right? It's like, and he tells a great story at the beginning. He talks about he was in telecom when the mobile phone happened, when it started to catch hold before iPhone, early 2000s. And he goes, I stood up on stage and I held the phone to my ear and I said, nobody's ever going to use this thing because they don't want to worry about service. He's like, this is a fad. This is going away. And then he said, yeah, the technology was the thing that surprised him. And I don't feel that way. I certainly don't think that much technology has been adopted in the industry. So, but anyways.
So this may be a topic for another day, Kevin, but I think that nothing changes until there's full alignment between consumption and the business model. And you and I know that the average house is now like 20% more efficient than 20 years ago. The average energy bill down from like 10 years ago. It's all deflationary. It's really hard to create a transformational business when you have deflationary pricing at your top line. And so, the day when there is just oversupply of any, wind, solar, batteries, gas is a baseline, nuclear is a baseline. And just like people have to start thinking about what do we do with this excess power? And you can start pricing electricity based on value and not based on some arcane rate. That is when I actually do believe technology will change within weeks, months, years, but not until there's alignment that you can have like a consumption aligned business model. Do I think that would be a huge change?
Expand on that a little bit. I know you said it's a topic for another day, but obviously the rate thing is stupid. And Jerry Dice was ahead of the curve here, right? I mean, like we're 3 years into Choose, and Jerry's like, it's not a site redesign. We need to get suppliers to give us a flat rate. And no one's done that still. I mean, they're starting to. Startups are trying to.
Yeah, I mean, it's business model innovation. I mean, not to hawk something we that I have invested in, but Volta looked at the system and said, the commodity is so cheap, we won't be able to grow a great business here unless we find a new avenue to monetize.
That's right.
I believe that, so utility scale solar, utility scale wind, baseline for other products like batteries, it's only getting cheaper. We're going to look around one day and say, energy is so cheap. It's not about how much can we save. It's what can we do with this? And I actually don't think in 100 years that's been the discussion around energy. The last great appliance for energy was like the dishwasher. Okay. So like there's been a 60-year gap of like, what can we do with electricity as a power source? So, and EV just percolating onto that idea.
And we've talked, I mean, you and I have sort of talked about this. Like, we don't like investments where you're increasing cost as the core revenue driver is shrinking, like power, right? Because like they're getting margin compression and you're not really doing too much good if you're adding a cost unless your value is tied to output or some other thing. Obviously, I think I feel that way. Do you think in terms of like with extra consumption, that there's been a lot of talk around it, like having a nationalized grid infrastructure? Like, are we going to have to do that with extra consumption? I don't think people think about how challenging that is from a regulatory and market perspective, but
yeah,
is that the kind of bold idea you think has to happen if we're to use all the excess power?
So we are talking about fun edge use cases, to be clear. Right? And I would always go against a national anything.
Same.
I think better better economics occur when there's smaller agents involved. So I'll just say no to that. But I would say that, there are one of the beauties of the utilities is that I get the same power quality here, my house, as somebody in an apartment in downtown Chicago. There's the quality of power.
Mm-hmm.
And even if you can't afford it, utilities have great structures to cover that, the delta. And when we do move forward to more like atomized structures, one of the concerns is you still have to maintain that kind of safety net. This is a critical infrastructure service. This is and maybe one of the reasons we've dwarfed innovation is because the lights can't go off. And I just think in the data space and the cell phone space, they didn't have the same problem. Like they could let go of the rope and swing across the canyon, and here you just can't. And I think that is probably what's dwarfed it most.
Let's switch gears a little bit. You've been writing on exits in the industrial space. We have a big SPAC exit in the industrial space recently, and we have a real acquisition, a $5 billion acquisition in the industrial space. What are you learning? What's sticking out to you?
So a lot of people have a lot of opinions about valuations. And there's no right answer, but there's definitely a lot of wrong answers. That's what I learned. No, I think as the purpose of what I posted in terms of the example valuations was that for those where there is public data, there's actually a very natural story that goes from a healthy Series A to a few extra rounds to a big exit. But actually, the subtle message of the story was that there was 9 companies in a decade on that list, because most stories, the graveyard doesn't speak. We don't know the data because they either were underperforming or not great assets. And then for the rest, they were at a range of probably $50 to $100 million. And I'm sure some entrepreneurs made great money, but that are in a range where our venture industry doesn't reward them. So that was the narrative, and goal was be cautious with how you raise from excellent industry investors. Don't raise too much. Stay as lean as possible until you figure out your sales cycle. And when you figure it out, lean on the gas sufficiently. But it was a active conversation on LinkedIn today for sure.
Do you think, with just these anecdotes, do different industries go through different maturities from a venture perspective? And what I mean by that is venture has traditionally worked really well, or has up until recently, with the Series A firm that puts in $4 million at 15. Those are traditionally the firms that do the best. Is that industry specific, do you think?
I mean, I've looked at your website. I've looked at Energize's website.
I appreciate that. Thanks for.
And you're very clearly called the energy transition and the digital side of it. And I think that in the digital side of these businesses, again, as long as you capitalize them around that level, you can have great, and there's been documented, great exits and great company growth. The problem really is that even though we have that plastered on our site, we'll go capital light digital investments. 9 out of 10, deals that sound like clean tech still find their way across my desk, and those businesses just aren't great for venture. And we could do 50 of these. We could write 100 blog posts, and I'm still going to get those. And it just crushes me that there's no financing structure out there for them. But the fact is that those financing structures need to look a lot more like, public-private partnerships, 5 to 8% expected IRR, which is not what we're aiming for.
We've talked about it.
So hold on, let me throw it back to you. Is there an exit in the past decade that you look at and say that is an Intelis deal?
Yeah, it's in phase, and the reason I think it's in phase.
Interesting.
And I'm going to go.
That was a very contrarian investment when the final purpose.
Well, hey, look, you make money when you go train. Or so I've been told, or so I've read on Twitter.
You'll find it.
The reason I like in phase, or I think it is that kind of deal, at least in its mature state. And I wasn't around when it was, when it was first, so I can't comment then. Something you said there, and I was going to ask you to expand on a little bit, was deals still look like clean tech deals. And I think we're still in a state with a lot of energy that hardware is just going to be a piece of it. It's going to be hardware, software. Not everything, but it's just like, I think we learned early on when we tried to be software only from a deal flow perspective, that there are so many solutions out there that the hardware is not yet built for. Mm-hmm. Whether it's a type of sensor or a device or whatnot.
Camera, sure.
Gateway. I mean, I think you've probably seen a little bit of this with Zedata, right? Where it's like you have to have some piece of hardware. And Enphase has done that well. I mean, now if you look at their suite, they offer some software. They do have some hardware. So that's probably the one that the most comes to mind. I probably wouldn't have done Nest because of consumer.
Have I ever told you the story about Nest?
No.
Oh man, this is a great story. I don't know if this part was published, but hi Trey. So I go to Kleiner for my internship. Like the first week or two I'm there. I'm like, oh, this is the best place on the planet. And I'm going to meet people, and I meet Trey Vassallo, and we go into her office, and she drops this wood hockey puck on the table next to an early version of Nest. And she kind of looks at me, and I'm talking about what I want to do early stage venture and operations. She goes, "Oh, you should probably go talk to these guys at this company Nest." It wasn't even called Nest at the time. And I was like, "Oh, no. Like I have made it. I made it to KP. I'm not moving anywhere." Oh man. And then of course, literally it didn't take more than 18 months from that point to be like, oh, that's going to be the world's, best IoT company. And sure enough it was.
I just don't think I would have done it. I think I would have had the same reaction you did, where it's like, it's a thermostat.
Yeah. Does your house have one?
No, I have an Ecobee.
Yeah. And it's the funniest thing. I had one in the city, but now that we're up here, our whole house is Honeywell. Actually, it has lost some cachet. I think, for bigger houses, there's just better connected networks,
right?
In the net. But I get it. Like it opened up the idea again. Going back to the original idea, it made energy tangible.
Yep,
it was a beautiful device that you expected for this century.
That's right. Not to get too far off topic, but all energy comes back to distribution. I think why Nest has actually lost their edge is because Ecobee and Honeywell have made deals with home builders. So you don't.
I think the home builders end up controlling distribution and therefore price point, and you can't invest, or what's the?
I think they're good enough. I think an Ecobee at $100 that connects to your phone. That's all. I think that's literally the killer use case, is that it connects to an app. And if you have a thermostat installed in a new home that's built, for most people that connects to an app on your phone, they don't really. That's really it. That's the thing. And so I think Ecobee getting in front of that strategy, like every new home that I've seen in Texas, in terms of when we were touring, we were buying a new home, was built with Ecobee. They went and did deals with all the builders.
So this is definitely a topic for another day, but I could talk for hours about the right distribution strategies in energy and industry. I think we all wish there was an equivalent app store to distribute products. Yeah. For ease of initial customer acquisition. Forget the 30% rake from the app provided store, but the best product in this space actually rarely ever wins. The best product is one that just gets the right distribution model.
That's right.
And if there's a pounding table moment for me in all the companies I work with, it is that sales, go to market, distribution, technology. For the most part, any company coming to Silicon Valley, certainly in this space, has a good enough product to get into your first few doors. You're
not taking much technology risk in this space.
If you are, nobody's buying it.
Right.
It's critical infrastructure for a reason. There's no downtime allowed. Full stop, no downtime. And if you even hint that your product's not complete and already being tested by some large corporation, then you're toast.
So you asked me this question, I'll flip it on you. You seem surprised by my Enphase answer, but I think it's a good fit in terms of just What should I have said? You're a mentor. Which one would you have picked?
I think so. I was surprised, only because I mean it's a darling now. Like the stock is the roof and it's growing more every quarter. But I think when it went public, it was like 300 million. I think it dropped like 60 million at one point. So there was a narrative there where nobody believed in it, which again makes it a great investment. For Intelis, I actually think one of the nuances for you guys is like the why now, which is actually there's not that many businesses could have fit your profile in the past.
Yeah.
Right. Many technologies have enabled cost curves to come down. Consumers are more ready to engage in digital platforms. Corporations are more ready to adopt software in the energy space than ever before. So like, not to give a pitch for you, but there just weren't many answers because it is a first time, it's happening right now for the first time.
That's right.
In my mind.
Yeah. Well, hopefully that's a good thing. What did you take anything away from the stuff that you wrote today and you published today? Did you take anything away that was new? I mean, you're a student of this space. You've been in it for forever. Was there anything that surprised you?
So just to separate, there's the energy transition.
I should stop you for just a second. I just sounded like you by asking, is there anything that surprised you about that? Because that was the question I always get. That's a John Tuff question.
John Tuff question. Don't give away the secret. Today's was industrial technology, and Kevin, you and I will be releasing the energy transition data set in maybe a week or so. What I learned is, or I guess what surprised me the most about the data set was how there actually were a few hardware success cases that I didn't know about. Obviously, there's the old school and like exclusively hardware. Old school Amazon Kiva deal. Desktop Metal is clearly a software case that's coming forward right now, but it's making its hardware in most cases. So just I'd mostly written off hardware in the space, but some of the biggest exits will have hardware as a key component of their business model.
Yeah, I don't want. I mean, my natural intuition, because of for just like you just hear like it's easier to do a software business. Hardware is hard. Is that I don't want it to be the case, but I think that hardware is a piece of it for a lot of companies. I really do. It just has to be for a little bit.
Yeah. You mentioned Zadita for us. I mean, Drone Deploy relies on third-party drones. We've made another investment that'll rely on third-party cameras. There's so much. Like the built world requires physical things to capture physical. The physical world needs more engagement, and you can't do it all with software.
Yeah. Is there an analog there for the services piece too? Because I think you see a lot of people want to get away from services as a part of the business. And you've written pretty extensively on this and you've tweeted about it as well. But a lot of these companies, a lot of the customers do.
Let me tell you something. This is definitely, Kevin, I'm going to make us talk about this another time. I promise. My one sentence here is this. In the energy and industrial space, watch. This revenue implementation, which gets killed elsewhere, is your best friend. You should spend as much time making sure that every API from that customer is integrated into your software. You should spend every minute you can getting their CRM system connected into your software, because once it happens, they're never leaving. And there's a few businesses that we've invested in that we wish we had invested in whose revenue whose gross margin looked non-software up front. But then when you see the long-term value of the customer is going to be like 20 years in this space, just the embedded value is huge.
Yeah. We lost your video, by the way.
Oh, I did? That's a bummer.
It says your connections.
It's okay.
No worries. Yeah. No.
So yeah, I don't know.
There you go. You're back.
All right. Good.
So no, the services part, we're going up on 30 minutes. People will tune out after 30 minutes, but Yeah, the services piece is another one it's hard. You touched on this, like you just said, these things will take 20 years. We've talked about some of the stuff that comes across your desk. It's clean tech, it's hard, and we see some of that stuff as well. And like some of that stuff actually really excites me. Like it's really hard. I wish I had the background to due diligence on it, but I can't. I don't have the capital to capitalize it. Who should be? I mean, private partnerships are great. I still don't understand. I guess I do for some reasons, but like family offices are so well positioned to do this.
Yeah, but they don't lead deals.
Yeah. It's hard.
They don't like to lose money. They don't like to lose money. It has to be. They have to at least get their money back. So you can structure it differently. I would say there's no good answer. There's just no good answer. It sucks. There's no good answer. Yeah. I do wish. I just wrote a little note about this. Tweet about this. I do wish that Desktop Metal, which has like 25 million of revenue, Luminaire, which has like 15, and they're getting roasted for their valuations in the SPACs. We need them to be successful. We need more entrepreneurs looking at this space and saying, it's going to suck for 10 years, but I'm going to build a great product that'll get into the physical environment, be making real world impact, increasing the efficiency of our real world, which we don't talk about ever. The software world has been advanced incredibly. The fact is, you're my daily life when we commute from X to Y and then walk up to our office, when we can. That's the exact same as it was 20 years ago. We need more people building better products for the physical environment. And the current VC industry is probably not well capitalized for that. But the more we have these SPACs or any exit in the capital markets, it's just a great lighthouse account for early entrepreneurs. Yeah. And we need it.
Let's leave it there. That's a good place to leave it. If you want to follow John, where can they find you on Twitter, John?
John J. Tuff. TOUGH.
I'm Kevin D. Stevens. Thanks, guys.
Adios.